they should allocate their assets in order to maximize their product profitability. And so we developed a program in order to do this, and our program was based on the OPL user language, and it also connects to an Excel spreadsheet to pull the data from, and so our program then analyzed the data and puts the output back into the Excel spreadsheet in order to make it user-friendly. And basically our objective function was to maximize the net income of Capstone.
Some quick background information about Capstone. Capstone is a privately owned investment advisory firm located in Houston, Texas. They manage over $3.8 billion in assets for about 3,000 different clients. Clients include individuals, endowments, trusts, corporations, public funds, healthcare, and religious organizations. They provide products and services through 3 distribution channels: brokers and advisors, institutions and corporations, as well as high net worth individuals. They generate revenues by product fees associated with each of their 13 products. Each of these fees are anywhere from 0.1% to about half of 1%, and they make money by getting new accounts of assets, and the fee factor against it is what generates the revenue.
So again, our goal was to calculate the existing profitability of all of the products offered by Capstone, and then our second goal was to develop this optimization model, and the final output of the optimization model basically identified the most profitable product mix for the new product sales of Capstone. So this financial management tool enabled us to allocate expenses by product and in turn measure the product profitability. So
Our basic approach. First, we were given 2 different budgets, and the budgets were based off of a basic accounting budget, debits versus credits, and so we had to take all of this large, massive amount of information and combine it and pull out the data that we would need that would be relevant to our optimization model. We sorted through the data, found some costs, constraints, expenses, and obviously the fee factors so that we knew how to generate the revenue for each of the products. Then we had to familiar ourselves with OPL. OPL is similar to C++, but we took that huge user manual and flipped through and tried to figure out the basic concepts behind it. Then we coded the program with variables and constraints that we developed through pulling out information from the corporate budget, and then we had to analyze the outputs.
So this is
Our basic algorithm was first to initialize all the variables, then read the information from the Excel spreadsheet and assign it to the variables we initialized. Then we had to set up our objective function, which is to maximize net income, develop constraints such as the minimum number of new assets under each product, the maximum number of new accounts under each product, commission expenses, IT expenses, new account expenses, and then write the relevant information back into Excel so we can analyze it.
this is a basic snippet of our code that we wrote. I think we had 29 variables total. 12 of them were decision variables, and they were all of the float type. Sorry. Okay, so we had our decision variables, which we developed based on the relationships from the non-decision variables, which we pulled from the Excel files, and the 13 constraints that we developed were based on all the relationships between the variables that our program ran on, and basically that's how it determined the final solutions, so. And the final analysis that we came up with, we wanted to really understand how each of the products were performing. So we developed 2 sets of data, and the first one was based on the efficiency ratio of each product. And basically, the efficiency ratio tells us how much Capstone spends in order to make $1. And if you look at this graph, basically if the pie chart represents all the energy that Capstone puts into new product sales, we are recommending that they put the majority of their energy into the products with the highest efficiency ratios. So,
We also generated another set of information that proved that every product under Capstone's management is profitable. This bar graph shows the average amount of money made per new account. This helps Capstone by telling them how much their efforts going into one account is actually making them dollar to dollar. As demonstrated in the chart, our model determined that the equity index product is the most profitable, followed by fixed index and the RHJ product. So they can use these in the future to determine where they should put their energy in trying to find new accounts. We did find some limitations in our program. The first was, we think in the future we should develop an estimated max capacity of sales by employee rates of working, or we need to find something else to max it out. A new way of obtaining this max capacity value might be doing a forecasting of previous years to how much they might make in the next year. In the future, Capstone wants us to continue developing this model and possibly make it a multi-year model as well. And so we're considering working with them in the future to help. Questions?
This was all done on a single year's data, right?
Yes.
Did you happen to try it on some of the other years worth of data that you have?
The
Or some
single year
historical
data we got, some of it was averages over the past few years. So although we started out with last year's beginning assets to move on to this coming year, some of the data was average accounts that they've had for the past 10 years. So some of it was averages from over years, and then some of it was just individual.
That's funny how robust your model was in terms of, just took a different data set and stuck it in there and see if it changed very much. It'd be something you could explore. You referenced energy a couple of times. What did you mean by energy?
just how much, by energy, I didn't mean like actual like physical science energy, just how hard the company should try to make new product sales and certain.
And that was based on profitability?
Based on efficiency ratio as well as the average amount of money made per new account.
Any other questions? Thank you very much.